A couple of days ago, President Trump ordered the immediate evacuation of US embassy staff from Iraq. He also authorized departures from Kuwait and Bahrain. At the time, most people didn't really understand what that meant, but we saw from the way the market reacted that investors started switching to risk off. And for those of us who were watching closely, it was obvious this wasn't just a safety precaution. It was a setup for something much worse. And today that worst news has arrived. Israel has officially launched a major attack on Iran. This was a coordinated multi-site strike on nuclear facilities, missile production, and senior military leaders inside Iran. This isn't speculation anymore, this is confirmed. Last night, Israel launched what looks like one of the largest preemptive attacks we've seen in years, with over 100 targets hit across Iran. Nuclear enrichment sites, military bases, senior figures in the IRGC, all of it. Iran has already fired back with over 100 drones. Airspaces have been closed across the region and the markets are reacting. Now, at this point, it's hard to keep up with how fast things are escalating. So by the time this video actually goes live, there will likely be further developments. Now, I know right now you're probably wondering what this means for crypto, and I'm absolutely going to get into that in just a few minutes, so bear with me. But I just have one more thing to say before we get there. Trump ordered the evacuation of US embassy staff in Iraq, authorized withdrawals from Kuwait and Bahrain, and yet he told the public nothing. If this was truly an act he didn't support, he would have said so loudly. He's done it before. With Ukraine, he constantly says this must stop. He calls out leaders. He speaks plainly. But with this, neutral distancing. We weren't involved, but we were informed. That's not leadership. That's complicity. Because if you know something as big is coming and you don't tell the public and you don't tell Israel no, you are effectively allowing it to happen. This is a green light without fingerprints. This is, we're not stopping you, but we're also not claiming responsibility. And to me, that's worse than silence. That's endorsement dressed up as distance. Israel has nuclear weapons. We all know it. They just won't admit it publicly. It's called strategic ambiguity, the world's worst kept secret. But Iran enriches uranium and suddenly the entire world has a panic attack with sanctions, threats, and airstrikes. How is this not a double standard? How are we pretending that this isn't a power play where only the allies of the US are allowed to have a deterrence? And look, I'm not defending Iran. I'm not choosing sides here. What I'm saying is that this is a geopolitical proxy game being played over people's lives, and we're being spoon-fed talking points instead of truth. If you're going to say no nukes for the Middle East, then say it for everyone. Don't let Israel stockpile them while you bomb Iran for thinking about it. I'm saying this before we look at charts because I need you to understand we are at a moment in history that could unravel quickly. Crypto has dipped, gold has spiked, equities are pulling back, and people are scrambling for clarity. So with that out of the way, let's go take a look at the charts and work out where and how we can de-risk in the event that this gets much worse. I'm starting first of all on the lower time frame on Bitcoin, just because I want to explain to you how this week has unfolded so far, and then I'm going to give you a very big macro warning. So be sure to stick with me because you really need to hear what's coming up in this video. What you're noticing on my Bitcoin 1 hour chart here is I've circled these 3 areas. The reason for that is because this is very typical reversal part of the strategy that we trade here on this channel. If you've been watching us for a while, you may know a little bit about the levels, but I'll very quickly explain it to you. We trade in bursts of price action that tend to happen in 3s. This was one that happened last week when we had our low that created the low of last week at around 100,400-ish kind of dollars. The next burst of price action happened through here where we see it happen with high volume. And so that gave us the second burst. And then we went into the third burst. Now, following that third burst, that's where, if you understand this trading system, you start to look for signs of reversal. And there are many different ways in which that can show. On this channel, I often talk about the M and W formation, but there is another one called 3 hits to the high, and that's what this one was. So for our traders inside of Discord, this was a very typical reversal pattern that we were all looking out for that ended up forming the midweek reversal anyway, because it triggered that reversal towards the end of the session on Wednesday leading into Thursday, which is where we look for midweek reversals anyway. So trading this system was very easy to catch a short before we even knew that there was any news coming out. We hadn't seen the media this was a clear short setup regardless of what was going on. Now, just like you get your 3 bursts to the upside, you also expect 3 bursts to the downside. And this was a warning that I put out in Discord at the time. And my original targets were here on this chart right here, where I had shown the setup and was expecting us to play down to around 105K area. Again, this was all prior to us knowing anything about a war potential breakout. We hadn't even heard at the time about the Trump evacuation announcement. Obviously, as that news comes in, it escalates the trade. It brings in more volume when it brings in more uncertainty. So what followed from there was we actually ended up at my target much sooner than I expected. So my initial target was these 2 areas here, which was back to retest the prior high of the week. So that liquidity got taken out when we did retest the high of the week. We created a lower high that rejected off the 50 EMA, and that right there was a signal that further downside was going to come, which is what we're seeing now. And we can see now also that that has taken out even more liquidity to the downside. So all these lines across my chart are liquidation levels of open trades. Those trades are getting wiped out as the price continues to drop down. As they drop down, we remove them and we look to what is left below price. So if things are to happen in 3s, then we can see that so far they have happened in 2 to the downside so far. We're about to close out the week being Friday. We would expect that there is another drop to come on this. The caveat to that is that Fridays often set a trap. So if there is a move to the upside that is abnormal and unusual, it's possibly just setting up traders to trap them into the weekend. But at this point in time, I am expecting that a 3rd level drop will come. And that 3rd level drop might come to take out this liquidity here. So it's between about 100,300 to 102,500. But there's also a higher time frame major level of liquidity between 99 to 100,500. Now, this is a daily time frame level that I've been speaking about on this channel for quite some time. But now that you understand the smaller time frame, that means I can zoom out to give you the big warning. What I just told you is good for short-term traders. But now if you're long-term in crypto or if you're holding, this is where you really need to pay attention to what I'm going to say. When we have a look at the daily time frame, we can see here that we have the 3 hits of volume, exactly how I just explained on the smaller time frame. You see it in the green vector candles that bring in big volume and move price in a direction, in this case a bullish direction. Remember I just spoke to you about the different types of reversal patterns that can happen and that we usually on this channel talk about M and W formations? Well, look at this. This right here is an M formation and it's formed after 3 bursts of price action. That's a very big worry. That is a very big worry because it's on the daily time frame. The positive that we have at this exact moment in time that I'm filming this video is that currently the daily candle that is still got half the day to go, so anything can happen between now and the time it closes, but at this point in time it has spiked up off the daily time frame 50 EMA. So if we hold there, we're okay. If we break down below it, especially if we break down with volume, so it will turn into a red candle, that's going to be a very big problem and it's going to most likely mean a much bigger correction is coming. That is why earlier this week in Discord, I gave this warning to my community. I said it right here. We have a daily time frame M formation. It's not confirmed yet until it breaks the 50 EMA. Exactly what I just explained to you. But by the time it does that, if it does that, the price will be below 100K. Do you want to secure some profits now or do you want to risk it and see if the M confirms? This is what you need to think of for now. And that is my exact same message to you as well watching this channel. Taking profit when Bitcoin's above 100K is a pretty good area to take profit, to be honest with you. I'm not saying that you should close out everything and the cycle is over, but we are really on the verge right now. What you really should be doing is setting a plan for yourself. You have to have areas where the price validates your reason to exit. To give you an example, and you have to make these for yourself, but I'll give you an example. If the price were to break the 50 EMA and you were following a trading method like what we do, then we call that level 1 drop. And if price breaks the 50 EMA, especially with volume, we expect that it's going to drop down to the 200 usually. Then it retests the 50 EMA. All of that would be considered drop level 1, which means that there could be a further 2 drops to come following that. That to me would probably signal the cycle is over. So therefore, where are my personal triggers to exit for the cycle? Let's talk about that. My personal trigger to exit whatever's left of my portfolio, because to be honest with you, I don't hold many alts anymore. I also did this update in Discord. This was quite a while ago now. This was the 22nd of May. I said my time frame for exiting my cycle portfolio is currently somewhere between August to October this year. There's a chance the cycle could continue until Feb, but if that were the case, I'd still rather be 90% out before and use the remaining 10% to gamble and trade on whatever further upside there is. I clarified that and saying, I want to have offloaded most of my portfolio by August. That means between June and July, those months will be me selling slowly over time, aiming to be mostly out before August hits. Now, there were some coins that I planned to keep multi-cycle, but in general, this was my cycle portfolio plan. Things that I am trying to make money off this cycle, but don't plan to hold for the very long term. So therefore, I need to have triggers now because we're in the months that I said I was going to start to exit. So for me personally, number one would be if price did break through the daily time frame 50 EMA, that would be one trigger for me. I don't want to risk it. At the end of the day, if it broke through, let's just say it came down to the 200, there is another strategy where price can bounce off the 200 and continue. And so we won't know until we get there. But if I then felt like this was probably going to happen and that the cycle was going to continue from here, I could just get back in. So I'm really not that worried. Most of the alts that I'm still holding on to that I have been slowly selling out of, I don't really want them anyway, unless they're in the portfolio that I'm holding beyond this cycle. That's a different category. We're not talking about that. We're only talking about the portfolio that I built for the purpose of this cycle. So I would sell out here if we broke the 50 EMA. If I then felt like the cycle was going to continue, could easily get back in. So this, while I'm showing you this on Bitcoin, it applies to alts, but Bitcoin leads the market. So that's why I really just care what is Bitcoin doing in order for me to know what I should be doing with everything else. So that's scenario one. Another plan you could have is that you would let it break and you would sell on a retest. You'd almost be selling potentially at around the same price. The only gamble with that is that you don't always get a retest. So that's something you have to plan for as well. The safety with that is that you're understanding that price is coming down now. But at this point in time, the 50 EMA is acting as support. So instead of panicking, you're giving it a chance to see if it will continue holding as support. And maybe this M formation won't validate and we'll just trickle around like this and then we'll continue. That's also absolutely possible. An M isn't confirmed until we break the 50 EMA with volume. So I'm not saying to panic out now, but I'm saying now is an amazing time to create your triggers to exit. Whether price recovers from here and moves to the upside, you should still have triggers to exit, or it breaks down and retests a level that you have defined as your line in the sand. And so for me, the 50 EMA is the line in the sand. If price moves up to the upside, then I had prior, I'm not sure if they're still on this chart actually. In the past, I had given Bitcoin targets. Let's see if they're still there on the weekly time frame. Yes, here we go. Between about 125-ish to 141. So that's where I would expect price to go if the M invalidates, if we remain above the daily time frame 50 EMA, and we end up breaking out and creating new all-time highs. What's happening right now is horrifying. And while I've done my best in this video to help you navigate the charts, manage risk, and make sense of what's going on, there's another part of me that just can't switch off the emotion. I know there's going to be comments on this video that it's just business and this is why you don't listen to a woman when it comes to trading and money. But even as an analyst and an investor, I hope I will always remain human. Even as an analyst, I will be proud to keep my care for humanity, especially in times like these. Innocent people have to live through this. People who are terrified, people who are losing their homes, their family members, their futures. They didn't ask for this, and yet they're the ones paying the highest price. And so right now, if you're feeling conflicted because you also care about other people and what's happening saddens you, but the other side of that is that your trades right now are playing out and you're making profit, then know that you're not alone in that conflicted set of emotions. It feels deeply uncomfortable to profit during moments like this. Even if your trades play out perfectly, there's a part of you that feels guilty. But as hard as it is, you do have to put those emotions aside right now, and you do have to act like your own fund manager. You have to look at your portfolio and you have to make some really important decisions right now. You need to plan if you don't already have one. You need your triggers where to execute that plan. And once the triggers fire, you need to take action. All of this you must do without emotion.